I know these are overnight developments, and you haven't a chance to think too much about them, but it's a time this morning of rising global uncertainty, higher oil prices. Tell me how you process all that.
Well, I think it's very early. I mean, obviously, events just happened last night, and so I haven't had a chance to look at the market data. I guess oil prices are up. There must be more uncertainty, and I think we're just going to have to, see how this works its way out. I mean, at the moment, I think the fundamentals for the U.S. economy are good. The labor market is strong, so I think we're in a pretty good position there.
And this becomes a matter of how long the uncertainty continues, how long oil prices remain high, depending upon the economic effect they'll have.
That's right.
Let's talk about the outlook for 2020. These are early days of the year. 2% has been the number that you've been talking about. Is it still the number that you're expecting?
What are we talking, GDP or inflation?
Well, you tell me.
See, I mean, both are sort of relevant there. Like I say, I think the economic fundamentals are good. Labor market is strong. Unemployment's at 3.5%. Trend growth, I think, is 1.75%. I'm looking for 2 to 2.25% growth in 2020. So I think, again, above trend growth. Maybe we'll get luckier. Maybe the uncertainties will hurt us a little bit there, too. But so I think growth is good. I'm expecting labor markets to stay strong, the consumer. So I think it's an environment where inflation ought to be rising up to 2%. I think with the unemployment rate at 3.5%, very long and successful recovery, we really ought to be getting inflation above 2% to show that it's a symmetric objective. And if it goes up to 2.25, 2.5, that would be all right with me.
Back in November, you talked about being more aggressive in terms of hitting that inflation target. Do you still believe that?
Well, I think that we've been underrunning our 2% objective for a long time, and we've said for quite some time that we've got a 2% objective. It's symmetric, and I think after a while, people have to start wondering, are you going to hit the 2% objective? Now, there are a number of reasons why, headwinds have been in the way, but golly, the unemployment rate has gone down to 3.5%. The economy's doing well. The way that we would normally think about what should lead to inflation, we should have seen inflation. So there must be so much more at work that maybe we need more accommodative monetary policy. I think our current setting is accommodative. I think the FOMC has positioned us well for 2020. We've got some risk management positioning in the current setting, and I think it's one where inflation can go up above 2%. That's without, any oil price uncertainties, which obviously put another story into play.
Let's say we get to June and you're still not there yet. Would you be considering additional accommodation?
I think that's a fair question. I think I'd need to see exactly how the data are playing out. I think staying at where we are is a very good thing. I think a lot of people might kind of wonder, can you really stay at 1.5 to 1.75% if the unemployment rate stays where we are? But without inflationary pressures, I think that this is a very good setting.
Charlie, this is a fascinating time where essentially you guys are feeling your way to knowing what the unemployment, how low unemployment can go. Are you willing to just let it ride down if keeping policy where it is 3% or below 3% unemployment rate something that you'd be willing to test?
I think that's a great question. I think the way you pose it, feeling our way down, I think that we certainly have seen the unemployment rate fall from very high levels. And as we've gotten to certain points along the way, many of us have kind of gone, oh, geez, we must be pretty close to the natural rate. And then we keep going lower. Oh, it actually must be lower. Oh, there's no inflation. We kept expecting we would see inflation. 6% at one point might have been, are we going to improve upon that? Narayana Kocherlakota said we ought to be targeting 5.5. That was how long ago? And we're still, below this. And so I think that we need to be keeping our eyes on inflation, defending, promoting the symmetric 2% inflation objective, showing that we can get there. And I think the unemployment rate, it's a wonderful thing. I think more people are engaged in the workforce, gaining skills, improving their relationship with the labor market, people who previously didn't have those opportunities as much. And so I think structurally it's a good thing, too. But we really need to keep our eye on inflation. And unless inflation starts going up to something that is inconsistent with our 2% symmetric inflation objective, I think we're pretty well set.